Welcome everyone to this Energy Insights lecture. This is our special COP26 edition. We are Watson Farley and Williams, an international law firm. We advise on transactions around the world, and we have a strong sector focus on energy, transport and real estate. I am Marianne Anton. I'm a senior associate in our London energy team, and I will be your host for today's seminar. Just before we get into the subject matter, I just wanted to give you a few housekeeping notes. The first is that participant video and audio have been disabled to minimize interruptions. You may all have noticed that already, but just to confirm. If you do want to ask a question to any of our presenters, please use the Q&A function, which you should find at the bottom of your screen. We will either write a reply or we'll respond during the Q&A session at the end of the webinar. If we can, we'll try to pick things up as we go. Alternatively, you can get in touch with the speakers directly following the event. If we don't get to your question, we'll try and follow up with you afterwards. When we ask the questions, they will be asked on an anonymous basis, so don't let that hold you back if you have a question that you want to ask. And finally, just to note that the webinar is being recorded, so it will be made available for you to watch back later or share with your colleagues. So without any further ado, let's talk about COP26. So as we all know, COP26 is coming up in about 2 weeks. We are going to discuss today the goals of COP26 and what we hope to see and what we think might be coming out of that in a couple of weeks' time. Before I hand over to our panelists to introduce themselves, I'm just going to recap the COP26 goals. Just for those of you that haven't looked at them in a while, or if you haven't had a chance to spend any time looking at that website yet. So the COP26 goals, there are 4 of them. The first is to secure global net zero by mid-century and keep 1.5 degrees within reach. So countries are being asked to come forward with ambitious 2030 emissions reductions targets that align with reaching net zero by 2050. The second goal is to adapt to protect communities and natural habitats. The climate is already changing, and it's going to continue to change even as we do reduce emissions with devastating effects as we have started to see around the world. The third goal is to mobilize finance. So in order to deliver on those first 2 goals, we're going to need to make good on the promise to mobilize at least $100 billion in climate finance per year by 2020. I think we've all noticed it's 2021, but we'll get onto that in the questions. And finally, the last stated goal is that we must work together to deliver, and we can only rise to the challenges and address the climate crisis if we all work together. So that's a recap of the goals, and now I will hand over to my panelists to introduce themselves. Let's go to Anna first.
Thank you, Marianne. Hello, everyone. My name is Anna Mushab, and I'm the head of policy at Ultrascape Group. Just a bit of background to Ultrascape Group. We're an alliance of progressive businesses and civil society organizations who make the case for ambitious climate and environmental policy. We think that it's important to have those policies in place and be ambitious, not just to cut emissions, but also to deliver job creation, business competitiveness, and innovation. And this is now more relevant than ever as we're also grappling with economic recovery as we're looking to reduce emissions. We're very interested in COP26. We have members from across the economy who are very active in the race to zero and committed to cutting their own emissions. And we hope that COP26 will deliver the clear business case for aligning economic recovery with climate and environmental ambitions. And of course, mobilizing private finance to enable us to reach our mitigation and adaptation goals.
That's great. Thank you, Anna. Let's go to Madeline next.
Hi, I'm Madeline Greenhalgh. I'm the Policy and Advocacy Manager for Regen. I'm also the policy lead for the electricity storage network. So Regen is, we're a not-for-profit with a broad mission to decarbonise the whole energy system, so nothing major. And the electricity storage network is just what it says on the tin. We're the UK network for electricity storage companies. Our interest in COP26 is relatively obvious, but what we're hoping to do with COP26 is use it as a lever for UK action, and we're really focused on the UK energy system. So we're hoping that COP26 will be a lever to get our ambition and our action stepped up in the UK. And we also have one of our colleagues who's seconded into the COP26 team in the Cabinet Office. That's been quite an interesting journey for us to understand how we can actually influence COP26 and what impact it will have in the UK.
Fantastic. And last but certainly not least, we'll go to Bob.
Hi, my name is Bob Hull. I'm an independent consultant. Previously, I was a managing director at Ofgem, also worked at KPMG and National Grid. I've been involved in the energy transition, I guess, for the last sort of 10, 15 years, both in the public side and on the private side, helping investors enter the sector, changing regulation, and really being part of the clean energy revolution that is all about implementation of the COP26 mission.
Fantastic, thank you for that. Welcome, and thank you for joining us. I'm sure our audience will have some questions for us, and they'll be eager to hear your insights. So we've got a series of questions around the COP26 goals. And the first goal is obviously keeping net zero within reach. And they have stated that ambition is not enough, and there's a call to deliver the targets. So I think I've got a few questions, but we'll take the first two together. What concrete actions do you think we need to accelerate the phase out of coal, speed up the switch to EVs, and to encourage investment in renewables? The first part, and the second part is it realistic to expect those actions? So we'll go first to Anna.
Great. Yeah, I think actually you've picked a few areas where there's a bit of cause for optimism, because at least in the UK, we've seen less and less reliance on coal. We've seen EVs taking up a bigger share of the market, and of course, renewables are now much cheaper in clearing prices through the CFD scheme. So I think there is some progress already being made there. Of course, we still have a long way to go, and I think at the global level as well, we need to attract further investment in those areas. I think what's going to be important is, first of all, for the UK to show that it practices what it preaches, and really continue demonstrating how you can uncouple economic growth from emission reductions, and achieve both together. Showing that expertise to other countries is going to be really important. And I think putting in place a policy framework to enable further investment into those areas is likewise going to be key. I think carbon pricing is going to have an important role to play as part of that. With the gas crisis recently, we've seen a spike in carbon prices under both the UK and the EU emissions trading schemes. But I think there is still a risk that as the crisis subsides, we could still see the carbon price going down. So I think we absolutely must see a clear carbon pricing trajectory. And in the 2040s, I think it needs to reach around 100 pounds per ton of CO2 in order to start turning off those carbon intensive assets. And having that at the global level as well would be a really important goal, because first of all, it's a really important signal to investors. And I think a carbon price that goes up gradually can really serve to promote learning and get us to where we need to be.
And do you think that that's realistic, that we'll see some of that decided?
I think I'm partly optimistic. I think at least in the UK and in Europe, we've seen very clear demand from the business side, at least. As I was mentioning in the introduction, a lot of our business members, for example, have joined the Race to Zero, which is a UN initiative for non-state actors to commit to reducing their emissions by 2030. And I think that appetite from business has in the past really served to move government along and speed up decision making. And I think what's also really important is that there is a public mandate to do this. Again, in the UK, we've seen demand from consumers from across the board. We've seen students demanding to learn more about climate change and sustainability and how they can play their part. And likewise, we've seen the Climate Assembly coming up with some really sensible recommendations on how we can achieve net zero. So I think there's a lot of momentum behind it.
Great. Does anybody else want to chip in there? Shall I? Madeline, did you want to chip in?
Yeah, I think just to pick up on Anna's point that she made about the example that we're setting in the UK, I think for starters, should we say that we should set the example by not opening any new coal mines in the UK? I think that would be quite a good target, and we've seen some of the fallout from that ambition not being met, shall we say, by the UK. I think one particular target that has a really clear, measurable goal that we could implement is stopping the extraction of any new fossil fuels globally. There's been quite a lot of work done to show that if we burn everything we have, we won't meet the targets that we have. If we extract more, we certainly won't be meeting net zero by 2050 or 1.5 degrees. IEA have been quite clear about that. But I think knowing that there's that limit on supply will boost that investment in renewables. It will be a driver. So it comes across as a very negative thing, but I think it is ultimately that driver for investment and for development in renewable energy and helping us shift on that transition. So I think a really clear goal that we can actually measure, we can see that tangible action happening. We say that we're not going to extract any more fossil fuels globally.
And that's a very interesting point. We have had one question come in already, which was, how do you reconcile carbon pricing with energy security? And it sounds like you've partly answered that, Madeline, by saying, well, what we need to do is incentivize the investment in the renewable technology. I don't know whether anyone else wants to chip in on that specific question that we've had in, or whether Bob, you just want to add to what's been said already.
I mean, if I could sort of offer some comments on implementation over the next few years. I mean, we do tend to focus on renewables and electricity decarbonisation, but the biggest challenge is really heat and transport, which we'll face over the next decade. And I guess I'm not quite so positive about the way that's going. There are sort of great targets and ambition, but if we take the UK EV sector, it's still less than 1% of total vehicles are electric vehicles. Compare that with countries like Norway, where it's up to about sort of 12%, and new vehicles are dominated by electric vehicles. And it does sort of feel to me that in the same way that renewables have been incentivized through support, which has enabled technologies to be introduced, if there is going to be a real acceleration in the use of electric vehicles, then there has to be some support for doing that, whether that's through charging or through charging points, or incentivizing scrappage of fossil fuel use vehicles and so on. So there are sort of big issues, and also to do with heat as well. Decarbonising heat, whether it's electricity or hydrogen, heat pumps cost a lot of money for domestic consumers to put in place, with changes to insulation and so on. So there are a number of sort of key issues that government has to consider. And I guess the key issue for me about, you asked whether it's realistic. The bottom line, I think, as we're experiencing with gas prices at the moment, is affordability. And when it becomes sort of unacceptable for customers to sort of pay a certain price, and it's what the cost of those subsidies might be to realise that change. So I don't think you can just look at decarbonisation in isolation to considering the issue of affordability, because gaining public support, affordability is a key part of that. So I personally think there are some clear actions, but there are some big challenges ahead in terms of the affordability of doing those.
And I guess a question going to all of you then is, what actions do you expect to see coming out of COP26, not just in the UK, but globally, sort of by global agreement, and what gap, if any, do you anticipate between sort of what we need in order to meet the targets and what will actually be realistically delivered. Who wants to start?
So if I can comment on that. So first of all, I think having globally agreed targets is critical personally. Having that sort of accept, because there's nothing quite like a target to aim for that then drives the implementation of that policy. Like in the UK, setting renewable electricity or renewable energy targets for 2020 was a huge drive towards getting the change that was needed. And I'm sure setting such targets and then driving the implementation, the various sort of detailed policy changes that are needed to implement that are absolutely critical. And events like this can gain such great, not just political, but public support that then drives regulators, government policymakers, and so on to implement the detailed changes that need to happen to sit behind that. So personally, I think the setting of that target and also the initiatives, even if the detail isn't defined, the initiatives to try and achieve that is really important.
I think, sorry if I could come in, I think I'd agree with Bob. I think targets are going to be really important. And of course, we still have a few countries around the world who still have some way to go towards setting those targets. But I think for countries that have already set those targets, it's going to be really important to focus on how do you actually deliver them. If you look at the UK, of course, we have a net zero target. We have sectoral targets on renewable energy generation or phasing out petrol and diesel cars. But how do we actually get there? So I think in the next couple of weeks, we're expecting to see the net zero strategy published from government and the net zero review from the Treasury. I think it's going to be really important ahead of COP to set a really good domestic example of the market mechanisms that we're going to put in place to attract investment in those sectors and enable us to cut emissions. Some of the regulations that we need to see a level playing field, and also the spending that's going to be needed from government to support the delivery of those goals. And it's going to be really important to see BEIS and Treasury working together towards a common goal. So yeah, I think hopefully that will mobilize some action at the international level if we can really show that we've done the job domestically.
Great. So I think just keeping an eye on time and how much we have to cover, we'll probably move on to a set of questions around the second goal, which is about sort of adapting to protect communities and natural habitats from climate change. That is already happening. And it's interesting, the goal on the COP26 website is actually stated to be in particular for those countries affected by climate change. Now, I think not all countries are affected by climate change yet, and certainly many countries, including the UK, have deindustrialized, and that's resulted in fewer domestic carbon emissions. But we're importing an increasing number of carbon-intensive products from abroad since we don't make them domestically anymore. And that drives the growth of carbon emissions in other countries. So just to set the scene here for some of these questions, the focus in this particular goal seems to be on direct local effects of climate change. And my question to you is that the right focus, or should the great and the good be focusing on carbon consumption as well as carbon emissions? I think if we go to Madeline first on this one.
Sure. So yeah, I completely agree with you, Marianne, that consumption is a huge issue that needs to be addressed. I do have I feel quite uncomfortable with some of the arguments that really demonise high emitting countries like China. There's a very good reason why they use so much energy, and the high consumption rates in the Western world are really benefiting from the use of that energy and from the use of fossil fuels, despite, as you say, Marianne, the fact that we have decarbonised quite a lot of our energy production. So I do have some very uncomfortable with that, and we absolutely need to address that. But I do think that needs to be a separate conversation to adaptation. I think the adaptation goal is still a really important one. So I think it's important not to mix those two up too much. I think we've had that tendency to shy away from adaptation, so let's not miss this opportunity to do that. It's a really clear goal here. I feel that sometimes we feel that we're admitting defeat by talking about adaptation, and Paris has done a really good job of trying to address the balance there. But ultimately the majority of finance is still going towards mitigation and not adaptation. But not only is it being focused on mitigation, but it's also being focused away from low-income countries, from small island nations. I mean, the countries that are going to be seeing the immediate and future effects of climate change, they're not getting that money they need for adaptation. It's disproportionate to the experience that they have. So I agree with you, Marianne, but I think let's not mix mitigation and adaptation too closely. I think we've come a long way to getting richer Western countries in the global north to take responsibility for our historic emissions, for our contribution to climate change. And that's really working on mitigation, but it's not working so well on adaptation. So I agree there should be quite a separate goal with money and time and effort focused on it in a separate way to mitigation.
Does anybody else want to chip in on that one?
I mean, if I can sort of offer a comment, I mean, I think one of the key issues here is looking at measurements of embodied carbon, which sort of tries to assess, as Madeleine has said, the import of carbon from manufacturing in other countries, and quite often the embodied carbon, which might be, for example, in construction of low carbon buildings, a lot of in development of wind farms and so on, there is quite a significant degree of embodied carbon with a lot of the developments in developed countries. So I think sort of measuring this, trying to reduce the impact of this, assessing it as part of the sort of carbon benefit calculation is absolutely key. And I suppose what that sort of then starts to drive is, once you measure it, it starts to drive behavior change and the way that this trading carbon, if you like, in embodied carbon is measured. And, it's possible to do it at the moment, but I sort of feel that it's not really measured or targeted because it so much affects sort of economic trade and so on. And perhaps this should be prioritized more as a way of sort of trying to manage the global sort of carbon balance, if you like. I mean, it starts to sort of feed into sort of wider debates about sort of measuring natural capital that a lot of companies are looking to do at the moment as well. And, it is a sort of key element of that. And I'm sure it will become increasingly more so. I mean, it's the old sort of adage, what you sort of measure, you can manage. And it feels that, this is sort of, again, something that probably needs to get increasing sort of national and international focus as a key issue to be managed.
I would agree. I think measuring embodied emissions is probably the next frontier, and also focusing on carbon consumption is going to be really important going forward. Because in the past we've seen a few instances where the UK's emissions have gone down, but it's because we've actually ended up, closing steel plants, like in the case of Redcar, which I think led to industrial emissions in the UK being nearly halved. But actually, yes, it does mean that we're importing more carbon intensive products from abroad. And I think it's not just for the sake of other countries that we need to be thinking about this, but there are actually some important opportunities from the UK in thinking about how to reduce consumption emissions and how to locate low carbon industries here. Just to give you a couple of examples, I think in the UK, demand for cement has grown in the past, but it's not looking very likely that we're going to be opening any new cement plants, and we're actually meeting that increased demand by relying more and more on imports. And likewise, scrap steel, which is, secondary steel making is one of the key avenues for reaching low carbon steel in the UK. Actually, the scrap that we produce here, we're exporting to Turkey and sometimes to China as well, and importing it back, which is not good for domestic productivity, and it's obviously not good for emissions. So I think there are some really important opportunities there. But as Bob was saying, I think we need to also focus on measuring that side of things, not just absolute emissions, in order to capture that opportunity.
Bob also mentioned sort of natural capital, which sort of leads quite nicely into my next question. Some of the expanded text around this goal that's come from COP26 is to enable and encourage affected countries to protect and restore ecosystems to build defences, warning systems and resilient infrastructure in agriculture to avoid loss of homes, livelihoods and even lives. And I guess my question to you, perhaps a little bit leading, is it enough to enable and encourage affected countries, or should we be expecting more concrete actions from all countries? There's an old saying that we all know, an ounce of prevention is worth a pound of cure. Should we be expecting countries to take action sooner? I guess, Madeline, did you want to start us off on this one?
Yeah, I mean, concrete action from everyone would be great. As I've already said, I think putting the money into the right place as well, into the right places, into the right activities would be very much welcomed. I think with the COP is an opportunity to rebalance some of that. I think, but one of the things we have to really recognise is that adaptation it's not just tackling the effects of climate change, it's helping a country to be resilient and improving the resilience of that country. So I often worry, how on earth do you do some of the really tricky things we're talking about in decarbonising? So, my day-to-day job is looking at how, for example, we might decarbonise heat. Some of these are really difficult, complex, thorny problems about individuals in their homes. How do they change how they heat their homes? How on earth could you possibly be expected to address some of those concerns if you're still rebuilding your house after the last flood, hurricane, fire, drought, anything? How can a country possibly expect to be resilient enough to deal with that? How can we expect people to deal with that if they are affected day after day by the effects of climate change? So I think we just need to realise that adaptation money can help us to decarbonise in the long term as well. So adaptation really does mean economic resilience and prosperity, and that means a faster route to decarbonisation.
Bob, did you want to?
I mean, if I could just sort of add on that, I mean, I think there is a sort of two levels to this. One is, as Madeline says, national policies that really recognise this and take action. But I think there can also be, very sort of small initiatives that together combine to sort of really create a change as well. So for example, just in construction contracts, for example, recognising the need for decarbonisation, recognising the need for natural capital factors to be taken into account in procurement contracts and so on, and valuing that in commercial contracts as well as national policies. And it's actions that companies, individuals can take that together can sort of build up to quite an important impact. And yes, there may be additional costs involved with those, but quite often there's not. It's prevention, as you say, rather than trying to remedy something. There's lots of small actions that can be taken that individually sort of add up to a lot more. So I think there is a potential for just recognising the issue, and a top-down and bottom-up approach can provide a benefit.
That's an interesting point on the costs, on it costing more. And I guess one of the things that people don't often think about is that although it might cost more upfront, you might end up saving money in the long run. If you build in sort of flood prevention measures, then you won't potentially have huge damage to a building that might be completely destroyed, versus a building that's cost a little bit more at the beginning but has the right defenses in place so that it could survive these kinds of events. And I guess that sort of resilience is something that we need to be pricing in, as you say, as individuals and as corporations. But I wonder whether there's any direction that you think we might expect to see coming out of COP in terms of bringing this to front and center.
I mean, personally, I think the whole sort of ESG movement is sort of obviously very much supportive of those type of sort of corporate actions and so on. But clearly there's space for local authorities, national governments to also proceed down that path and make that a sort of requirement of procurement, cost benefit assessments and so on that build in those type of standards. So again, I think from a policy point of view, there are a number of initiatives that could be included, and I think are increasingly being considered. But clearly, a a strong push from governments to do that, I think would, I suppose, provide a level playing field for all parties to sort of take that into account as part of just normal business and policy practice. So again, it's probably a case of setting targets and then delivering that through local policy change and so on.
Great. If we turn to the third goal, which was about mobilizing finance, as I've mentioned at the introduction, the goal for 2020 has already passed as we are coming up to the end of 2021. But mobilizing finance is clearly going to be a key part of delivering net zero. What would allow international financial institutions and private investors to play their part? What's the right balance between government and regulatory action versus market action? I think we'll go to Bob first and then Anna, I think.
So I think first of all, I mentioned the ESG funds. I mean, I was reading an article from Bloomberg the other day, sort of saying there's something like $50 trillion expected to be available for these type of assets by 2025, and largely split across the EU and the US. So a very significant amount of money that is potentially available for investment in projects. But I think for that to happen, the key thing that investors will look for, I mean, I guess is two main things. One is sort of regulatory confidence, that there will be confidence in the market rules, in the government and regulatory policy, and that will be consistent over a period of time. There won't be sudden changes in tariffs and so on. And the second is having clear price signals for investment, particularly long-term investment. And just to give an example, in the UK, there's somewhat of a boom at the moment going on in flexibility markets, because flexibility storage is needed to enable all the renewables to be operating, to have a very low carbon intensity power system. And those renewables might be demand response, it might be storage, electric vehicles. All of that can participate in these markets. But for that investment to take place, there needs to be some confidence about the long-term price signals that are available. So the market design needs to take account of how those price signals might work. And the markets, electricity markets in particular, have been designed around the incumbents, the big sort of players, which include the big renewable operators and so on. So change in a market is a challenge, but needs to happen to unlock all the capital and apply it to those type of projects. So I think from my perspective, there's a huge sort of appetite for investing sector, but the detail of putting that in place is limited at the moment, and is probably limited by the governance structure, the incumbents that we have in place, changing from that environment to one where it unlocks this huge wall of investment capital that is available for those markets. So I think, regulation and price signals are the two key things that will really allow this to accelerate over the next few years.
Anna, did you want to add to that?
Yeah, I mean, I think I agree with Bob. I think it's really important to have that long-term certainty as an investor. I think just to give an example from the UK, on the one hand, we have sectors like offshore wind, where we've had that CFD framework, which has really enabled costs to come down. It's given investors confidence, and we've really seen the results of that. On the other hand, we have the housing sector, and we have all those schemes that were in place for increasing the take-up of energy efficiency schemes and low carbon heating. So we've had the Green Deal, we've had the Green Homes Grant recently. That sort of stop-start model of policy intervention is just not helpful, and I think it can really damage market confidence. So I think we need to see more of the former, less of the latter, more policy stability to encourage investment. And I think also a lot of investors that we've spoken to, they have the appetite to invest in low carbon solutions, but I think sometimes there's a perceived lack of pipeline of projects to invest in. And again, I think that's where regulation and market mechanisms like carbon pricing can come into place, and really help create that pipeline. Again, worth bearing in mind that these are some of the solutions that we need investing in are still seen as fairly new, like hydrogen and CCS. So we need a level of co-investment with the private sector to really de-risk that initial investment. And I think also just to briefly touch on the natural capital side of things, again, that's a really key area where we need more investment from the private sector. But I think it's been really difficult to date because there's not a clear return stream from natural capital projects. So I think, again, working with the public and the private sector working together to overcome that is going to be really key. I know in the UK, the Environment Agency, DEFRA and Triodos Bank are working on some return models and funding schemes for natural capital projects. And if those are successful and can be scaled up, that would be great, because we absolutely need more private capital into natural capital projects.
Madeline?
Could I just give a slightly counterpoint to that? I think we have to be really careful about sustainable investing in finance if it doesn't come with that government regulation. I think markets will ultimately only move in the direction that is profitable, and at the moment that profit is still fossil fuels. It's not natural capital, it's not renewables. The profit is still in fossil fuels. I wish it wasn't, and we're certainly moving to a point where renewables are the profitable investment for sure. But that's not going to happen until government regulation stops fossil fuels from being profitable. So we really need to see that strong action and the rules being put in place that makes those projects not profitable. So, a ban on gas boilers, for example, the ban on the sale of fossil fuel vehicles in 2030 in the UK. That's really great, and they're the sorts of things that will see the finance world change. But I think the finance world can't change when that main vested interest is in pursuing profits. Many of you here, I'm sure you're all joining this call because you're interested in the renewable sector and in decarbonising. So your money is going into those renewable projects, but where your money is being taken out of that, someone else is picking up that fund. Someone else is investing in those fossil fuel projects because they are still profitable. So ultimately, I think regulation is the only way of stopping that. If we just leave it to the market, the market will pursue the profit motive, and that is unfortunately still in fossil fuels.
And it's a very good point, Madeline. And on that point of sort of big scale actions, obviously, we in the UK there is a ban on sales of new internal combustion engine vehicles that will be coming in 2035, I believe. Correct me if that's been brought forward. But something like banning the use of fossil fuels, or saying where we can't, bring in more of those out of the ground, I think perhaps on a nation by nation basis that might be achievable. But do we think it's realistic to expect something that drastic and meaningful, that kind of thing? But is it realistic to expect something like that to be coming out of COP26 to be agreed in such a short period of time? Any takers?
If I can come in briefly on that, I think we absolutely need that sort of regulation, and we need to phase out high carbon alternatives. But I think what's really important to avoid backlash and to really ensure buy-in of this agenda is public engagement before that happens. I think we're already seeing in the UK this whole debate around the cost of net zero. And I think, part of it comes from the fact that there has been very little engagement with the public on, what exactly this transition means for you. Are you still going to be able to afford to, drive your car or heat your home? Is it going to work properly? I think we've seen very little of that from government, and we've seen little of, using some trusted institutions to really reach everyone. We've had some examples from our members National Grid who have done this sort of engagement on the transition to low carbon heat, and really spoken to people across the country on what they think this transition entails. Would they be willing to give up their gas boilers? And I think, surprise, surprise, when you actually engage with people, they're not really that wedded to gas boilers. They're very willing to make the change, but they need to make sure that, first of all, it's going to work properly. They're going to be able to have heat on demand. They're going to get a good deal and, be able to fix those boilers if something goes wrong. I think because we haven't had that level of engagement, it's really difficult to just use the regulatory side of things, because you will get public backlash.
That's a very good point. I think we've talked a bit about, how do we mobilize the finance and how do we bring people along? I guess sort of tied to that is a question about where can the finance, once mobilized, can it be directed where it's needed most, and how can that be achieved? So how can we do that to ensure that no one is left behind? You've mentioned already sort of consumer behavior and consumer changes. So if I go to Madeline first on that one.
Yeah, I think there's a really difficult balance here between taking money out of fossil fuel projects and allowing countries to decarbonise in a fair and a just way. If you're just simply taking money away from those projects and leaving or saying no more, taking that money away, or saying no more coal, no more gas, no more fossil fuels, then there's a real difficulty there in allowing people to make that managed transition. I do think we talked about this already, but it's up to richer, developed countries to help and give that expertise and support and finance. But it's not up to us to tell people how to make that transition. I think that's partly what got us into this mess in the first place, right? By telling people in the rest of the world how they should be functioning. So I think that transition needs to be made in a way that works for that country. People allow countries to take their own path, one that works for their citizens, like as Anna says, really engage with their citizens and is managed in a way that people will go along with and be happy with. But I think we need to be able to get that finance and that expertise where it's needed, funneling that money without being too prescriptive, allowing people to take the transition the way they need, but simply taking that money away from investment and from just saying no more fossil fuel projects is not the whole answer. It's part of it. It's a spark, but I think that we really need that targeted sort of transition, that targeted support to allow that just and fair transition in this country, but also in the rest of the world.
Did anybody else want to?
I mean, if I can offer on this, I mean, I think there are lots of subsidies and cross subsidies that exist that have grown sort of over a period of time, and it's a really difficult challenge for governments and regulators to change an environment that's existed, energy prices and how bills are organised. I think when you come to sort of cost of transition, it's one thing is sort of understanding sort of what the subsidies are, what needs to be addressed, and there are mechanisms that governments have. They can tax or relieve tax, they can introduce subsidies, and all of those seem to be entirely sort of legitimate public policy decisions. But I think it's a case of understanding where these subsidies lie and the direction that they want to go in. And clearly from a government point of view, every time it makes an intervention, it will distort the market and has to be sort of carefully thought through. It seems to me with the scale of the energy transition that we're going through, just relying on pure market solutions, because no market is pure, it's designed with certain policies in mind. And I think that's a sort of something that governments do have to be brave about, and to decide how they are going to support certain types of customers, if that's the policy decision, or certain technologies. But it is a balance between the two, I think. And governments have two mechanisms. They have, they can penalise through taxes, they can support through subsidies, but ultimately, you know, it is a choice, and I think the main thing is to decide on it and make that choice, you know, rather than just leave the markets as they were, because it doesn't feel that they can exist in a form that was designed for fossil fuel industry of 20 years ago.
We've actually had a very interesting question about tax breaks for carbon reduction as the other side of the coin to carbon pricing, and whether you have any views on that, as you know, is that an idea that has merit?
So, I mean, if I sort of kick off, I mean, I think from the, you know, it seems an entirely sort of sensible approach. You know, it is a policy that, you know, clearly would drive a certain outcome. I guess with all of these, it's the unintended consequences that one has to look at. You know, how much is it going to cost? Is it going to have a negative impact? You know, so I mean, it seems like an entirely sort of sensible thing to look at. But you know, I personally sort of would say that's sort of one of many options that are available, but others may have views on it.
Yeah, I think I would agree. I think it can be an important instrument, and obviously government is in one way or another subsidizing carbon reductions through different mechanisms or business models. So yeah, I think it could be a useful instrument, but I think we need to be really certain about the integrity of those carbon reductions. Is it something that's done in the proper way, or are those emissions going to be avoided in the longer term? I think if that money goes towards, you know, investment in new technology, something that's going to boost productivity, then, you know, why not? I think there are similar schemes in other parts of the world. For example, I know in the US there was a scheme that paid companies, I think it was around $45 per ton of stored CO2 as a way to kind of kickstart the carbon capture and storage market. So yeah, I think if the money goes towards the right types of projects, then definitely. But as Bob says, I think we need to be really mindful of unintended consequences on that.
Great. And Madeline, did you want to pitch in?
Just really quickly, I think, well, one, let's stop giving tax breaks to fossil fuel projects for a start. That'd be nice. But yes, definitely tax breaks for low carbon projects, for decarbonised projects, for sure. I think in a positive way, some ways, we're having this conversation now about what does a decarbonised energy system look like. And we're a fully 100% decarbonised renewable energy system. What do tax breaks look like in that system? That's something we're thinking about now. So yes, that's tax breaks, tax reductions would be fantastic right now, but we need to be really careful. A lot of these companies are becoming incredibly profitable. You know, they are, you know, offshore wind, onshore wind, solar. There's lots of money to be made there. Those companies should absolutely be contributing the right amount of tax. So I think we just need to be really careful that tax break might work right now, but absolutely needs to be tapered off. We need a plan for how those companies are going to be contributing to the tax system, to the country, once they are becoming very profitable, and once we have a fully renewable energy system. We can't just continue with, we need a plan for how we're going to transition to that, basically.
Great. That actually brings me on to the fourth goal, which is all about working together to deliver. So we've talked a bit about you know, how different companies and different parts of the economy can work together. I have a couple of specific questions on this point, though. I think we've sort of alluded to and referred throughout to the reality that most emissions come from very few countries. For example, without China on board, delivering the net zero targets is impossible. So how do we bring everyone along? I'll go to Bob first on that one, please.
There's so many levels to this question. I mean, I guess if you look at it internationally, then clearly, you know, that's what events like COP26 should do. You know, that the target should be to try and get an international consensus, you know, a treaty, a target, some movement towards a common goal. But then you do then sort of run into the sort of national and local alignment, you know, and things like getting public support for these targets, and there's many ways of doing that. I mean, we've seen sort of last year, the year before last, the Citizens Assembly, which was quite a unique approach that was used in the UK with the Climate Change Committee, and indeed having bodies keeping pressure on government to do that is absolutely key. But I sort of struggle when it comes down to implementation in practice, and some of the difficulties that local authorities, businesses, individuals have in engaging with markets, with the energy system. And it is hugely complex and difficult to actually take personal initiatives. And I do feel that there's a barrier of energy system governance regulation, if you like, that makes it difficult for distributed energy, the sort of new revolution that's sort of taking place, to actually participate in these markets. So joining the dots between national policy, international policy, and then local delivery still seems to me has an awful long way to go, but particularly at a local level. So I mean, it's complex whichever way you look at it, but that's probably enough. I'll stop there.
Did anybody else want to chip in on this one? We can move. Madeline, did you? We'll move on to the next question then, which is about the call to accelerate action through collaboration between governments, business and civil society. So taking each of these in turn, what kind of collaboration would actually deliver results? And is it realistic to expect any of that to come out of COP26? Who wants to start us off on that one?
I think just on collaboration, I mean, between any of those that you take, government, business, civil society, I think Bob's point about that national and the local element to that as well is really interesting. So government, business, civil society, but also the citizen and the local authorities that come within that and the communities that sit around that. But if you want all of those people to work together well, you need each participant to be able to hold up their end of the bargain and keep those promises. I think one of the reasons why that collaboration is not working at the moment at all of those levels is because the promises are being broken within that collaboration. So there's a lot of parties that are acting in good faith, but that trust is breaking down at every level and stopping any real steps of collaboration. You know, we're seeing at the international level, we've already talked about coal and saying that we don't want any more coal plants to open up across the world, but we're talking about opening a coal mine in the UK. We've already seen other countries, India, for example, really railing against that and saying, why should we do it if you're not going to do it? You know, and that sort of, those broken promises really affects that level of collaboration. I think that's something that COP26 absolutely needs to try and fix. I think that's quite a big ask to ask government to keep their promises. And I say government because I think at the moment it's mostly, I really feel that the UK government are breaking a lot of those promises and they're making a lot of damage, not only to that international stage, but also to, you know, to people, to local governments who aren't getting the money they need to deliver that action, to people who are not seeing the delivery on things that they're expecting. So COP26 could be a really good opportunity to repair some of those relationships and actually see that ambition coming out of the government, those promises being acted on, and then internationally and domestically, we might see some of those collaborations really coming to the fore if that trust is sort of restored.
Yeah, thank you, Madeline. Does anybody else want to pitch in on that one? Okay. All right, and then a final question then on working together. The Paris Agreement has been effective since November 2016, but the Paris Rulebook that makes that agreement operational has not yet been agreed. Is COP26, is this, so one of the goals of COP26 is to agree that Paris Rulebook. Is that too little too late? What would be a more ambitious goal? If we go to Anna first, maybe with that one.
Yeah, I mean, I think the Paris Rulebook absolutely needs to be agreed at COP26. I think it's probably what everyone is hoping for. I think especially in relation to Article 6, which really talks about setting up this global carbon market that helps economies decarbonize at lowest cost. Many people say that could really make or break the Paris Agreement. And actually, we've seen that it's a sticking point in previous negotiations. So I think COP26 really must deliver on this point. And the reason why we must have this Article 6 in place and finalized is to really make sure that this carbon market functions properly and delivers a level playing field. We've heard a lot about the use of offsets as a way to reduce emissions. I think the integrity of those offsets can really come into question if we don't have that framework agreed. So just to give you an example, there's a lot of concern around double counting of some of these emission reductions, because you could have the emission reduction mechanisms in place, and the reductions can be counted against the target of both the party that's selling that mechanism and the party that's buying it. And currently there's no framework to kind of prevent that from happening. So of course that can, again, diminish investor trust in the market and reduce investment over time, when actually we need to see this ramping up. So establishing that integrity of the offsets market is going to be really important. And likewise, something related to Article 6 is, which I know is a big blocker for countries like Brazil, is whether we roll over some of those carbon credits that were established under the Kyoto Protocol, under the Clean Development Mechanism. Those were very cheap. So actually, if we roll those over into the Paris Agreement, there's a risk that the carbon price would really depress. So I think, again, just managing that in a fair way is going to be really important.
Thank you for that, Anna. And you've actually answered one of the questions that we had come in, which was about Article 6 and will it be agreed at COP26. One of our attendees has said that Article 6 is critical to establishing a policy foundation for an emissions trading system, which could lead to global carbon price discovery, and that cooperation mechanism is essential to raising ambition for carbon reduction targets. So I think you've nailed that one. Conscious of time, we've got a couple of minutes left. We've had a couple of questions come in, and there's one very interesting one that I just want to throw out to the floor before we wrap up. Does the current gas crisis enhance or detract from the argument for investment in renewable energy? Who wants to have a quick stab at that one?
I mean, if I can sort of have a go first. I mean, I think there's sort of two issues here. One, it would, on the face of it, sort of signal that there's a strong benefit in more renewable energy substituting for gas and gas shortages. But one of the consequences of this has been a failure of a number of energy suppliers, and I think an intent to strengthen or make it more difficult for energy suppliers, which probably is going against what's happening in the energy transition, where you actually need more participants in the market with different business models and so on. So if the result of this is that it's more difficult for new businesses to set up and be part of the energy transition, then that's probably an unintended consequence. So I think any sort of regulatory change needs to carefully think about what market participants we need in the future, rather than trying to, if you like, shut the stable door after the horse has bolted.
If I could just briefly comment on that, I think with the current gas crisis, I think obviously there's a focus on what do we do in the immediate term, and we've already seen coal coming back into the energy mix as a way to guarantee energy security. We've already seen companies that are struggling to cope with the level of gas prices, talking about more flexibility on free allowances under the UK and the EU ETS. I think we need to avoid those knee-jerk reactions, and obviously we need to do something in the immediate term to tackle the crisis. But I think the answer in the long term is not to move away from renewables, because otherwise we're going to be locked into this very carbon-intensive path, and it's going to be very difficult to still meet our climate and environmental goals if we do that. I think part of what needs to happen is to guarantee that level of energy security, we need more investment in interconnection and storage. We need to bring as many mature renewables to market. So as you know, onshore wind and solar weren't able to participate in the contracts for different mechanism until recently. So it's really good to see those coming back into the scheme. I think also we need to guarantee that frictionless trade of electricity with neighboring countries. And I think that's going to create a higher level of security.
Great. We do have a couple more questions coming in, but unfortunately that is all we have time for. We're running just a minute or two over time. I just want to thank you all for joining us today. It's been a very interesting session. And I want to thank all of our attendees for taking the time to join us today. And I hope that they've also been given a lot of food for thought. So that's all from us. Thank you for joining us and have a great day.